Hey guys, welcome to another video. So there is a lot I have to show you today. There's a lot that happened this week, especially on Friday when the NFP was released. So there was a lot of movement in the market and there was a lot of opportunities we could capitalize from. And looking back at the previous video, like the one we did last week, if you follow that video properly, it could help you to take a lot of opportunities that came up this week. And so I'll do a quick trade recap just to show you what we're looking at, because there's a lot that unfolded last week and there's still a lot that is going to happen this coming week. So you probably want to stick to the end because there's a lot of information you'll pick from this one this time. And also, if it's the first time for you here, don't forget to hit the subscribe button. All right, so let's do a quick trade recap. So we had opportunities last week on BTC, we had NAS, we had US30, and we had gold. So I'll start very quickly with the BTC one. So this was on the second, like on the 2nd of May, and the first position we had on BTC was right here. So I was going in for a buy position on BTC right here, and we did a trade management on this as well. So we move our stop loss to break even again. So as price progressed, we move our stop loss to break even, and there's a system I use for doing this. So there's a way I move my stops to break even. And the next one, we secured I think 0.59% once price started consolidating around this area, and as price moved progressively, we took our stop loss again a little bit further just to lock in about 0.8%. and as the trade progressed, now this was on the 3rd of May, and I'm a swing trader so I can hold my trades for longer periods. So this was on the 3rd of May, and on this day, so we had moved our stop loss to this point, securing about 3.07%. And on the 4th of May, we moved our stop loss again to this other area right here, securing about 3.97%. So that's just on BTC alone. And let's look at the other pair. So we had another opportunity on NAS100. So the opportunity on NAS100 and US30, these were very short positions. Like the target wasn't that far or big compared to what we're looking at on BTC. So this was on the 2nd of May again. So we went in on the buy. This is NAS100. So we went in on the buy on NAS100 right here. The trade management again. So I moved my stop loss to break even, and on this one, stop loss moved to break even. So we had on NAS100, when I moved my stop loss to break even, this was already a second trade, because the first trade I had on NAS100, my stop loss got hit. So I took the first trade, it was a loss, and then I took the second one, and the second one is the one that actually moved in my favor. So that was it. We did this break even on this position, and eventually prices went to the target point. That was NAS100. So on US30, real quick as well, we had a buy on US30. This was on the 2nd of May. So what you see on NAS100 was a similar move happening on US30. So we had a buy on US30 as well, because we had an entry on this pair. So we had the entry signal. So I went in on the buy, moved my stop loss to break even again. You can see right here, and we closed this position at say 3.35%. So NAS100, US30, and BTC, those were very good trades. Even though I had an initial loss on NAS100, I had another trade opportunity on gold, and this wasn't right here, so it wasn't shown there. Let me show you on the chart. So I had a buy opportunity on gold, and I didn't update this on the Discord channel, but this was a loss, so I took a loss on this pair, and that's fine. So 2 losses and about 3 wins, and it was a very good week. So let's move straight up and do the first analysis for today, which is normally the DXY. So coming in from last week, we had this area we've been looking at, and I was anticipating say a pullback to an area like this or even lower, and then you see prices coming back to the upside. So the most important thing about the weekly forecast or the weekly analysis is when you know what you're looking for, it becomes very easy. I'll just give you an example. We've been looking at this move to the upside for a couple of weeks now, and every time we do the market focus, all we're talking about or all we're just looking at is price moving to the upside, pulling back, moving to the upside, it pulls back, it moves to the upside. So once you have a foundation of what you're doing, it becomes very easy. So for example, we've watched this entire move to the upside, and then now we see prices moving to the downside. So this uptrend seems to have been violated at this point. So we'll combine two concepts here, and I'm going to be a little bit faster today. So we'll combine two concepts here. The first one is this trend moving to the upside. When price moves to the upside, there is a pullback. It moves to the upside, there's a pullback. It moves to the upside, there is a pullback. Price moves to the upside, there is a pullback, and then it attempts to move to the upside, and there was this difficulty for price to go past this point. So when I looked at this in the community with those I was trading with, this was an area of interest for me because I was very concerned about this area right here. And since the DXY found it very difficult to go past this point, it was already like an early signal for me that price is probably going to move to the downside. And I think it's just like basic common sense. You really don't need a lot of technicals to understand this. If price is moving to the upside, making higher highs and higher lows, and it finds it difficult to make another higher high, it's just an early indication that price might be preparing to reverse. So right now we have this uptrend that has been violated right here. So this uptrend, each time price touched this point, you see price is moving to the upside. But right now price has violated that area, and we're sitting on a psychological number. So the first principle was the movement to the upside, and I was looking at it from this trend line. Now that the trend line has been violated, I'm switching my bias from this uptrend to say a potential downtrend, and the downtrend hasn't formed properly, but this gives you already like an insight as to what is probably going to happen. So we have prices outside this trend line, and we have prices sitting on 105, and this is the complexity about it, because coming into next week, I know we're preparing for sales. We should see some sales coming in, but how do you expect the sales to come in? So for me, I'll probably want to see prices pull back up, just like a retracement. If he gives us a good retracement to an area like this, or maybe this cycle number of 106, and we see some rejections around this point, we should expect to see prices moving again to the downside. And this is where it gets really complicated, because when you say prices is probably going to move to the downside after the retracement, what point are you trying to take price to, or what point do you think price is most likely going to reach? So is it going to stop at say 105? Is it going to get to 104? Is it going to get to lower cycle numbers and areas like that? So because I'm looking at it from the daily time frame, it might be different compared to what you're looking at. So I'm looking at it from this time frame, and this is the only piece of price action I'm focused on right now. And I know very well you have this other piece of price action right here, but if you use say the weekly time frame and the monthly time frame, then that is probably a good area you want to look at. You want to look at that piece of price action, and so it's going to help you decipher, or it's going to help you decide as to what point price is going to sell to if we get a pullback or a retracement for us to see the sales. So that is it. That is what I'm looking at for the DXY coming into next week. Just because of what price has done already, because price was moving to the upside, making higher highs and higher lows, we had a violation. Price is sitting at a psychological number of 105. If it finds it difficult to go past 105, we should see some kind of retracement, and then the sellers coming in again. And we can look at it say from lower time frames just to see if there's anything that makes sense to us. So when you look on the 8-hour time frame, now you need to have looked at price say a couple of times or over a given period of time for you to actually see what is happening. So if you look at this piece of price action right here, it might not be evident for you to see it on the 8-hour time frame, but you have an impulsive move to the downside, and there's somewhat of a consolidation. You have another impulsive move, and price is sitting at 105 at this psychological number. So now if you step down to lower time frame, say maybe the hourly time frame or the 4-hour time frame, you should see a downtrend. So you should see a proper downtrend with prices putting in lower lows and lower highs, and you can use this piece of price action right here to tell if the retracement is going to come in or not. So we'll step down, say, to the 4-hour time frame, and I'll show you real quick. So on the 4-hour time frame, it's still difficult for you to see because all you have is price moving down. You have a consolidation. There's somewhat of a consolidation here, and price is sitting at this psych number. So I'll move down, say, to the hourly time frame, and I believe the lower you go, the easier it is for you to see this piece of price action properly. So this is what I was looking at last week right here. So on the hourly time frame now, it makes a lot of sense, and there is this possibility that the pullback or the retracement is going to come in. So look at this here. You had a move to the downside. You had this area here where price pulled back. Another move to the downside, period of consolidation, which is basically a retracement. We had a move to the downside, period of consolidation, which is basically a retracement, and we've had prices moving again to the downside. The important thing, or the best thing about lower time frames, is it gives you a clear picture of what is happening on higher time frames. So this piece of price action, when you look at this on, say, the daily time frame, when you look at it on the daily time frame, all you see is just a move to the downside like this, and you see the violation, or you see the break or the breach of this uptrend. When you look at it on the hourly time frame, it tells you, like, what you see on the hourly time frame is it's like it gives you everything. It's like you've opened every piece of price action and you've seen the details of it. So look at this right now on the hourly time frame. So when you look on the hourly time frame, you see the downtrend that is forming. Price is moving down, consolidation or pullback, down, impulsive move to the downside, consolidation, which for me is just a pullback. Another move, consolidation, is still a pullback, and another move, there is a consolidation here, and you should expect. So when you look at price action, I'll show you this real quick. When you look at price action, each time there is a move, there is a consolidation or that pullback, it drops massively. Consolidation or a pullback, for me, it drops massively. Somewhat of a consolidation, which is still like a pullback, it drops massively. There is a consolidation here, and there's that inability for price to drop to take out these lows. When you see something like this, it tells me already coming into next week, I should expect the DXY to pull up. We should expect the retracement to come in on the DXY, and this is just simply technicals. It's not, I'm not bringing in any other concept. So it's just the trend line and the side numbers. So using this trend line, using this side number, and just understanding how price moves, it's easy for me to tell coming into next week I should expect prices to retrace to the upside, and once the retracement is complete, we should see sellers taking prices again to the downside. So what is the other possibility if this doesn't happen? So if we look, say, on the daily time frame, okay, cool. So if we look on the daily time frame, what if the pullback doesn't come in? It's also very possible, it's possible for price to continue moving to the downside to test an area like 104. So say Monday, Tuesday and stuff like that, you could see two impulsive candles that just takes price to 105, from 105 to 104. It's still very possible because price is going to do what it wants to do. And when I do my market analysis or the market focus, I'm going off of my strategy, I'm going off of my understanding of price action, and I'm using this to anticipate what is most likely going to happen. So back on the hourly time frame, you must understand there is a high possibility this retracement might not even come in. So we could come into next week and all we see is price moving to the downside. So what you see here, which is a consolidation, I'm just going to clean this real quick. I'm going to clean this real quick and explain this from this point. So what you see as this consolidation or this pullback, you might look at it right now and think price is moving to the upside, but the way price moves is very funny because sometimes you can get a misread as well. So because I'm looking at this move and there's a consolidation and then there is a drop, after the drop you get a consolidation or pullback and another drop, consolidation and a drop. Now we have this consolidation right here. So it's still very possible that once prices open next week, we see this drop coming in. And that's because you're only anticipating, because at this point I'm saying there is a high possibility price is going to move to the upside, because after this consolidation, if I zoom in right here, so after the consolidation, just zooming in right here, the last candle, the last hourly candle, which was this, is already trading outside this trend line like so. But there's still a high possibility price might do something like this and then it drops again to the downside. So when I do say the market focus, I give myself this freedom to switch my bias depending on what price does. But this is my pre-analysis. This is what I'm looking at. I'm expecting prices to move to the upside on the DXY, expecting prices to move to the upside. Once prices move to the upside, I expect these sellers to come in again and take prices lower, maybe to 105, or it just depends on where they want to take prices to. But this is my pre-analysis on the DXY. So let's look at these other pairs. Let's look at these other pairs, say US30. Let's start with US30. So with US30, price is still moving to the upside. So we had this impulsive move, we had this pullback, and I was in this buy positions as well. So once prices went to the upside, I took this buys and I exited already once price eliminated this part. So looking at it from this point, we've had prices making highs and there's like a pullback here, it's made another high, there's a pullback, there's a high, there's a pullback. Going off of what is happening on the DXY, I'm expecting these prices to move to the upside. If these prices have to move to the upside on the DXY, then I'm expecting sales to come in on US30. So looking at it from this, if you put say a trend line on this one, just to make it easy for you, because you really don't have to if you understand how price moves, and I like using this just for visual representation. So if you have something like this and you have price pulling back and moving to the upside, there's this consolidation and move to the upside, we should say expect prices to pull back to an area like this. And once you see price finding it difficult to make new highs and a bridge, you wait for that pullback and then you get selling opportunities. So that's what I'm looking at, say on US30. And when you do a proper analysis on the DXY, for example, here, and you know what you're looking for, it takes a minute or two for you to decide on what you have to do on these other pairs. So we'll look at NAS100 as well. So NAS100 now is pulling, say, to an area like 18,000, which is a psychological number right here. And I also trade off of psychological numbers. So once this moves to the upside, which is building up on NAS100, so let's say price gets to this point, all I have to do is study this piece of price action right here. Higher highs, pullback, higher highs, pullback, higher highs, pullback. So I'm looking for the point where these buyers are fading, or these buyers are finding it difficult to move to the upside. So if we get something like this and there's that difficulty, and then I'm looking for, like, say, a pullback, because now you have this uptrend that has been taken out and we should see that pullback coming, or this retracement, and then it gives you an entry signal for you to take prices to the downside. A similar thing I think is happening on the S&P500. So with the S&P500 as well, this is the piece of price action I'm most interested in, and that is because we're looking at this area right here on the DXY. We're focusing on this, that's what's happening on the hourly time frame, combining it with what's happening on the daily time frame, and you try and make it like easy as much as possible. We're just trying to make it as easy as much as possible. So back to the S&P 500, this is what I'm looking at as well. So price is currently moving to the upside, and you can use a trend line again if you want to, just to help you. So when I have something like this, all I'm waiting for is, say, this uptrend to get violated, and they will look for, say, a pullback, and they will look for selling opportunities. Now the entry technique and all of that is not, I'm not really going to explain that on this market focus. I'm just doing the focus to help me prepare for next week, and nothing complex, nothing complicated as well. So looking at US30, NAS100, the S&P500, I'm expecting buyers to find some difficulty to move to the upside, and then we'll look for selling opportunities. On NAS100 as well, I'm watching this area where you have the psychological number. I'll clean this real quick. I'll just make this clean, like right here. So where we have this psych number of, say, 18,000, I'm very much interested at this point. So what is price going to do at this point? If price starts consolidating at this area, and I see that there's a violation of this, and then I'm ready to go in for sales. And that's simple because it's not complex, going off of what is happening on the DXY as well. On US30 is the same thing. If price finds it difficult to go past this point, I'll make it clean as well. If price finds it difficult to make higher highs, so we're looking at this area. So once I see some consolidation, some difficulty at this point, this taken out, you wait for that retracement, and then you're looking for selling opportunities. Now let's look at gold. So this is a more pair which I took a loss on, so I'm going to do this real quick. So I took a loss on this one, so I'll take it off here. And the most, like, what is interesting about gold is we're currently sitting on, say, this psych number of 2300 right here, and you can look at it just just going off of what is happening. You have this move to the downside. I'll make this bigger. So you have this move to the downside. Price goes through this psych number of 2300, but it pulls right back in. It attempts again, it pulls back in, some consolidation around this point. What you see here, where you have these wicks and then everything, that was because of the NFP release and stuff like that. So we still have price pulling back and sitting above this point. I'll clean this. So we still have prices sitting above 2300. So you can see price in above 2300. So every time price goes through this, it comes back, goes, it comes back, consolidating, it goes, it comes back, and prices at this point. So this is where the DXY and gold might be a little bit difficult. So let's take, for example, looking at the DXY. Let's say the DXY decides to go in for a sell, which is what I'm like. This is not my first take on the DXY. My first take on the DXY is to see prices moving to the upside, like right here. But if this happens, a pair like gold might be like really good for you to look for buying opportunities going to the upside, because everything that is happening here, it's simply telling you price is finding it difficult to move to the downside. But again, if the DXY decides to move to the upside, and eventually if it decides to move to the upside and I see prices trading below 2300, this for me is a sell. But if price stays above 2300, then I'm looking for opportunities to go. Yeah, if price stays above 2300, I'm looking for opportunities to take buys. And if price drops below 2300, I'm looking for pullbacks, I'm looking for retracements, and anything that can help me go in for sales on this pair. So it's not really complex as well. It's very easy. And again, there's just a high possibility the sales on gold might even come in compared to the buys, in as much as price is sitting above 2300. So there's a high possibility we might break below 2300 coming into next week. So you can look at it from this point. You've had this massive move, you've had this pullback, you've had price dropping, and you have somewhat of a pullback which is forming, say, a consolidation. So if you struggle with entries, if you struggle with, say, a system to go in and out, I would say just hold on gold a little bit, let price move, say, to the downside, you get a retracement, you go in for the sells, or you look at an area like this and you wait for prices to break this, there's a pullback or a retracement, and then you go in for buys. That way it's easy for you, because at this point it might be complex. But for me and the guys I'm working with in the community, we could already see something here, because there's a setup, as I keep telling you. We have setups to look for during periods of consolidations like this. But if you're new, or if you don't have a technique to play around with price action like this when it becomes choppy, it's best for you to wait for this to break. There's a retest and you can go in, or you wait for price to show you it's planning to move to the upside. You wait for a retest, and then you look for an opportunity to go to the upside. So I'll show you very quickly this BTC position. So we're still holding, I'm still holding this like this buy position we had on BTC. And if you look here, let me see real quick. If you look here on BTC, so this is where my stop loss is, and I'm still holding this position on BTC. So if you look at the chart real quick, this is it. So I'm still holding this position. I just want to see if price eventually moves to this point, it's going to stop me out, and I've secured about 3.97% on this. But if price continues moving to the upside, and this point right here is not my final target, it's not like the target point for me. I'm just putting it just to work with the risk to reward ratio thing. So if price gets here, we're looking at a 1:7.8, so that is like 7.81%, and it could go higher than this if this eventually moves to the upside. So I'll keep managing this position on BTC, and I'll let you guys know, I think next week, how this played out. And if you trade crypto pairs as well, you can look at this and just know my stop loss is right here, and if price drops, know I'm out of this position. But if price continues moving to the upside, the next point for me to put my stop loss would just be around here, if price takes out this area. So that's pretty straightforward. And we're not going to do the focus on BTC because it's just a lot, and I'm trying to keep these videos as straight to the point as much as possible. So that is it for this week, guys. And if you found this interesting, like if it's helping you, don't forget to hit the like and subscribe button. See you during the next one. Bye for now.